This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, having been introduced to assessable, i.e. taxable benefits in the previous session, we come now to probably the main one that we're ever going to have to deal with, both in terms of real life and also, rather more importantly to you, in the exam. Cars. The provision by your employer of, shall we call it, a company car, with a further possible add-on that not only do they pay for the car itself, but for running expenses. Maybe those running expenses include fuel. And if they do, then on top of a car benefit, the employee may face assessment on also the assessable fuel benefit. So let's see what we've got. First of all, for there to be any car benefit whatsoever, if there is no private use, which is very unlikely, then there would be no taxable benefit. Where you might see that there is no private use is actually the last little point in this particular section, where an employee, indeed it will be groups, several employees, who have the use of a pool car. Now, the use of a pool car does not result in a company car benefit, so there's not a company car benefit. What is a pool car? One provided for the use of any employee to use purely for business purposes, and it's kept at the business place of work. So at our place of work there is a vehicle there, and that's available for anybody who needs it to go out on company business, and that's it. They can throw the keys to anybody with a driving license. Right, you're going to see that client, you're going to see that client, right, you can use it for that pure business purposes. And for that, therefore, there is therefore no assessable benefit on any individual employee. So watch out for the existence of a pool car. But most questions are going to involve, of course, calculating an assessable benefit for the pure simple car, company car. Now, what information do you have to go directly to and pick up from within the question? First of all, as regards the car, there's going to be a list price. You will be provided with a list price. Now, what they might also do is to tell you that you bought the car, or the company purchased the car, for £23,000. But the list price of the car was £25,000. It is £25,000 that will be the object of this assessable benefit. And to that list price, we apply a percentage. A percentage, the basis of which is given on your rates and allowances. And you can see these percentages here, and the percentages that we get initially are given for petrol. We also cover diesel cars, because those rates are increased by 3% for diesel cars. We'll be adding plus 3% if we're dealing with diesel cars. Dirty things, diesel cars, so that therefore we're polluting the planet rather more, so on that basis there's a bigger taxable benefit. And as you can see down this side, we have the CO2 emissions. And as those CO2 emissions increase from 50 grams per kilometre, this is how we measure CO2 emissions there, 50 grams per kilometre or less, we start at what would be a 9% of our list price as the assessable benefit, or of course if it's a diesel car, plus 3%, that would be 12%. And then it gets ever higher as we go through these tranches here, 51 to 75, 76 to 94, until we get to 95 grams per kilometre, at which we've got 18%. Now, what we may tend to find is that the particular company car that we're dealing with, or it may be we're dealing with several such cars, but one of them, if not more, the one probably, has got CO2 emissions in excess of 95 grams per kilometre. Now, as we've run out of bands here, that's it. What happens above 95 grams per kilometre? Well, we start with 18%. And we're going to add to that an additional 1% for every complete 5 grams per kilometre above that 95 gram per kilometre cut-off level. We don't keep going up. The maximum percentage, still a big number, is 37%. And that maximum 37 is also applicable for your diesel cars as well. Yeah, we've got the rates are increased by 3% there, but always the cap, the maximum, is 37%. Notice though in our description, an additional 1% for every complete 5 grams per kilometre. So, for example, if the particular company car you were dealing with and seeking to assess the assessable benefit, you were told in the question was, say, 139 grams per kilometre. Right, that is more than 95. So at 95, it's 18%. So we're going to start with 18%. Plus, if it was a diesel car, we'd add 3%. Let's assume this is a petrol car, but if it were diesel, we'd add 3%. Plus an additional 1% for every complete 5 grams per kilometre above that cut-off level of 95 grams. So what do? We take our figure, here 139, and round down to the nearest 5 grams per kilometre. So that will round down to 135. So if it's 136, 137, 138, 139, we go down to 135. Minus 95 to see by how much do we exceed that 95 gram per kilometre limit, and then divide that out by 5 grams per kilometre. So 135 minus 95, I think, is 40. Divide by 5 equals 8. So that, therefore, is an 8% increase. So if this is a petrol car, it's 18 plus 8%, which will be 26%. And you'll apply that 26% to the given list price. Again, that information will be provided within the question. If this was a diesel car, we'd be adding in plus 3%, and that would take you up to 29%. Remember, though, that figure, that final result, can never be not beyond the maximum 37, whether petrol or, as mentioned here, diesel, not beyond the maximum 37%. Obviously not an issue with that level of grams per kilometre. Okay, so the information we need to know the list price, we need to know the CO2 emissions in terms of grams per kilometre, and we also need to know in terms of the percentage here whether it is a petrol or whether it is a diesel car. And that will allow us, putting all of those things together, to establish then what the assessable benefit may be. Then we've got the issue about the list price. Includes the list price of any accessories fitted to that motor car. So again, we're going to add in there any accessories. Again, what happens with like a movable feast, isn't it, in terms of a car? Certainly a new car, when you buy it, they will try to add on as many extras as they possibly can. Those extra luxury fittings like seats, for example, there. But no, they will have various different accessories that you can add. So the list price includes the list price of any accessories fitted to the car. So we add that in. But then that list price may be reduced by any capital contribution from the employee, i.e. towards the cost of the car, subject to a maximum of 5,000. So, for example, we suggested a moment ago that maybe the company car bought for the specific employee had cost £23,000, but had a list price of 25,000. So the figure that we were going to use was the list price of 25,000. The cost was 23 of itself, irrelevant, because, as we've said, we used the list price, not the presumed lower figure of cost there. But what may have happened is that the company in question had a limit of, say, £20,000. That, for you, your group of employees, this employee can get included there. You can have a company car, you can pick your company car, but up to a maximum cost of 20,000. But the employee wants this particular car that's going to cost £23,000. So what the company might accede to is for the employee to say, look, you spend 20,000, I understand that, I want this particular car, therefore I'll put the extra £3,000 to that. I will make a capital contribution towards the cost of that car. So what do we say? It cost 23, list price 25. What did we pick up? List price, 25,000. And without any other information, it is that list price that would then have the relevant percentage applied to it. But if now there is a capital contribution, so we said that the cost of the car was 23,000, but the limit for the company car was 20, so the employee contributed £3,000 towards that cost himself or herself. That is a capital contribution. We haven't exceeded the maximum £5,000. It was 3,000. Take it away. So when for each future year we use the list price to base the annual assessable benefit on, it'll be based on 22,000, i.e. the list price, less that capital contribution made by the employee. Now you do have to differentiate here that original one-off capital contribution with what might be a revenue contribution that is made by the employee to the employer for the benefit of having the car. Now what we should know is that whenever an individual makes a contribution back towards to the employer for the benefit of that particular benefit that provided, here the car, then what we tend to do is to make a reduction for any price paid. Remember the rent paid by the employee to the employer for the benefit of the living accommodation. It reduced the assessable benefit. Now, in relation to the car, maybe the individual is required each year to make a contribution back to the employer. Why? Because he has the benefit of that car for private use. Any such contributions, therefore, are deductible from your assessable benefit. So if you've got your list price, reduced if necessary by any capital contribution towards the car cost, we've worked out what is the percentage based on the CO2 emissions there, and also based on whether it was petrol or whether it was diesel. We will apply the percentage to that list price. That is your assessable benefit, subject to a deduction there in the case of any contribution. Here we go, reductions, where the employee makes a contribution to the employer for the use of the car. Now again, watch out how that is worded. Do they give you an annual figure? Do they give you a monthly figure? So it might be told that he is required to make a contribution of £100 per month to the employer for the benefit of having the private use of the car. In which case, if you've had the car for the full 12 months at 100, that is £1,200 to be deducted in deriving what your bottom line assessable benefit is. Do remember that all these calculations that we do of the main assessable benefits, they're all annual benefits. The living accommodation benefit was an annual benefit that we computed. The use of assets was an annual benefit. But as you saw in that one, if we've not had that benefit for the entirety of the tax year, what do? We time apportion for the number of months of the year that you've had that benefit. So it is here, therefore, if we've only had the use of the company car for half the year, then we'll only have half of the assessable benefit. If therefore you're required to pay £100 a month, that would only have been for 6 months, that would be a £600 deduction. So again, look very carefully at when the car was provided, maybe even when the car was ceased to be provided, where it was taken back there for whatever reason. Maybe the employee left that employment, of course, there. And make sure that we get the right number of months in terms of any employee contributions and in terms of any assessable benefit. As it says here, the car benefit is proportionately reduced, not just for contribution, but if the car is unavailable for periods of at least 30 days of the tax year. Now, that really is the sort of thing where it's, again, I don't know, maybe it breaks down in a very big way. Maybe it's been involved in an accident or whatever, and you don't have the use of the car for more than 30 days. On that basis, then we would reduce proportionately, time apportionment, we would reduce the assessable benefit. Normally, the only assessable benefits, time apportionments that we need to do is, of course, where you've only been an employee or you've only been an employee eligible for a company car for a part of the tax year. So from what date did it become eligible, did it become available, through to the end of the tax year? How many months is that? Or from the start of the tax year, maybe to a date later in the tax year where the employee left that employment and therefore ceased to have that car. We are computing annual benefits, remember to time apportion where necessary. Now that basis where we look at list price, we look at CO2 emissions and establish a percentage, we look at, to get that percentage, is it petrol, is it diesel, do we add in 3% or not? Remembering we can never go above a maximum 37. So we apply that percentage figure to the list price and establish the basic benefit. If there is a revenue contribution, we will reduce, therefore, that benefit by the amount of that contribution. Not that we might think we'd need a second company car, but where there's more than one car made available, the benefit of each car is simply based on its list price and CO2 emissions. You might not think that that is a very likely circumstance, but actually, although for most employees it's not, what you might have, of course, is an owner-managed company, a family-owned company, and therefore a particular owner-manager of that company is not going to have two company cars for themselves, but they may take one company car for themselves and another one for their spouse, for example, or for one of the children, in which case it's not impossible to see more than one car being provided to an employee. If that were the case, it makes no difference whether it's a second or third. Each car is dealt with in relation to the same calculation. What's the list price? What's the CO2 emissions? Get your percentage. Is it petrol? Is it diesel in deriving that percentage? And apply one to the other. Okay, we've got ourselves now lovely example 4 here, that will test us out in relation to computing our taxable benefits for 1718 for our heroes here, Lewis, Nico, Fernando, Jensen and Sebastian there. And of course, we're going to do this for 1718. Our company, Speed Merchants plc, provided these employees with company cars. Right. Who we got up first? Lewis was provided with a new diesel. Again, as it were, if you've got a written paper, certainly write on it there on the computer, but you could highlight it on the computer. Lewis was provided with a new diesel-powered company car on the 6th of August 17. We're looking at 1718 tax year. That's part way through the year. So we now know there's going to be a time apportionment in relation to what is our assessable benefit. August 17 through to the 5th of April 18. How many months is that? August, September, October, November, December. So 5 months through to the end of the year, calendar year. Then the first 3 months through to the end of March. We don't worry about the 5 days of April. 5 plus 3, that is 8 months. So of any annual benefit, we're going to times it by 8/12. What else do we need? The most important information, list price, a mere 13,500, and our CO2 emissions here, 122 grams per kilometre. What do we notice about 122? It exceeds 95 grams per kilometre. So what have we got to do here? There's your list price. No adjustment to be made to that list price. There's no extras there that were added on to increase that figure. And we've also got no capital contribution being made by Lewis towards the cost of that car. So 13,500 will be the object of the percentage based on emissions that we now apply. So what are those emissions? 122. So what do? 122 grams, it exceeds 95. So at 95 grams, we would have 18%. Plus, what do we have then? 122 rounded down, nearest 5, 120. 120 minus 95, divide by 5, times 1% there, to see what we get. So what's that? 120 minus 95, that is 25, divide by 5, that's 5, times 1%, that equals, therefore, 5%. So we've got 18% plus 5% plus, it's a diesel, so plus another 3% there. Right, time to get your calculator out. We've got 18% plus 5 plus 3. 18 plus 5 is 23, plus 3 is 26. 26% of list price 13,500. That would be the annual benefit. Did our hero Lewis have that company car available for the entirety of that year? No, only from the 6th of August 17, so then times 8 months. So to repeat, we've got a list price of 13.5, we've got 18% plus 5% plus 3%, that we said was therefore times 26%, and whatever that equals as an annual assessable benefit is then times 8/12. Times 8/12 there. And that will work out your assessable benefit. Okay, now again, you can pause at this point if you wish and go check that out, make sure that you're happy with it, before we then proceed on to the next one in turn. So just check that out, make sure you're happy with the way in which we've derived that answer, please. Okay, if we're okay with Lewis, let's try Nico. What have we got? Nico provided with a new petrol-powered company car throughout 1718, so no time apportionment on this one, it's a full annual benefit. List price 16,400, and our official CO2 emission rate of, ooh, that's a big one, 187 grams per kilometre. So, we know the list price 16,400, no mention of any capital contribution towards the cost of the car, no mention of any extras added on to that list price. We know it's a petrol car, so there's no extra 3%, but there is a big increase on this given it's 187 grams per kilometre. So what do? We round down the 187 to the nearest 5, so we're going to be looking at 185 minus the cut-off level of 95, divide by 5. So what's that going to give us, therefore? That's going to be 185 minus 95, that I think is 90, divide by 5 is 18%. What was the benchmark figure for 95 grams per kilometre? Well, that itself also was 18%. So that's 36% here. What type of car is it? It is a petrol car. So there's no extra 3%. So the relevant percentage, 33. Now then, here it was petrol. What would have happened if it were diesel? Would we therefore add an extra 3% onto the 36 to make it 39%? Would we do that? No. Because, of course, what's the maximum? 37. So here, if it were a diesel car, we won't be adding 3% to 36, we'd be adding 1%. The maximum it could ever be is 37. Not an issue here. Our figure is 36%. Our list price is £16,400. So you take 16,400 times 36%, and that will be the full annual benefit for the tax year. Again, no time apportionment. It was available throughout the tax year. Again, if needs be, you can check that one in the back, but hopefully we've got that. Again, not even worried for you to multiply the through on that with your calculator. I'm sure you know how to use a calculator. What was important is, did you pick up the list price? And did you know how to compute that percentage and the relevance of whether the car was diesel or petrol? On then to Fernando. Again, a petrol-powered car, so no supplement for diesel. Available throughout 1718, full annual benefit. List price, 22,600. That therefore will be the object of the relevant percentage. Relevant percentage based on CO2 emission rate. And lucky old Fernando, he's gone up to 249 grams per kilometre. Now I think with that figure, given what we've just done, with the 187 grams for Nico, I think we can see pretty clearly that we're going to be up and over and above what would be the maximum of 37%. So the maximum of 37 will apply. But let's just prove it. We start, is it 95 grams per kilometre or more? Yep, so 18%. Plus, we've got 249, round down to 245. Minus the cut-off level of 95, divide by 5, and times that by 1% to be able to get the extra figure here that will go in. 245 minus 95, what's that? That's going to be 150. Divide by 5, that would equal 30% there. I think that would be 30%. 30% onto 18 would equal 48%. It can't equal 48%. The maximum it can be 37% there, max. So although this was a petrol car, it didn't actually make any difference whether it was petrol or diesel. We were already on those CO2 emissions up to the 37% max. What do we apply it to? Of course, as always, the list price figure. So it'll be 37% times the £22,600 there. And that will be our annual assessable benefit, subject to anything else that we're told here. Fernando paid speed merchants £1,200 during the 17-18 year. That is a contribution by the employee to the employer for the benefit of having the private use of the car, and on that basis, therefore, that figure of £1,200 is deductible. So take your 37% times your 22,600 and deduct from that your £1,200, and you will have your assessable benefit to include in your employment income assessment. Nearly there, just another couple to do. Jensen, provided with a petrol power company car throughout 17-18, list price 16,000, and official CO2 emission rate of 90 grams per kilometre. Right, 90. We're below 95 for a change. So let's go back to the table provided to us. What have we got? So, 90 grams. What category is that in? That one. 76 to 94 is therefore 17%. So again, that table is provided to you. Got no problems on that. You've simply got to use it, check it out, and pick the number up. Let's just remind ourselves it was a petrol car. So in which case there's no extra 3%. Obviously we've not exceeded the 95 grams per kilometre, so there's no additional benefit there either. So in which case we will pick up our figure, as we've just seen there, from those tables. The figure from the tables we had was 17%, and times it by the list price of 16,000, and the car was available throughout the tax year. So on that basis, it is going to be a straight 17% of £16,000, whatever that comes to, as our assessable benefit for 17-18. Sebastian, new diesel car, so plus 3%. Throughout 17-18, full annual benefit. List price, 11,000. Official CO2 emission, even lower, 60 grams per kilometre. Right, back we go. 60 grams per kilometre. What have we got here? Well, which category does that come into? 51 to 75. 60's in there. What does that give us? 13%. So our starting point here, 13%. 13% plus. Well, obviously we haven't got above 95 grams per kilometre, so there's nothing to add on for that. But there is a plus because, of course, it is a diesel car. So plus 3% will equal 16%. What do we apply that to? As we always apply it to, what is the list price times £11,000, and that will give us our annual assessable benefit. Did we have it for the full year? Yes, we did. So on that basis, therefore, you would now work your annual benefit. Okay, check through those calculations, check through the answer please in the back. And what we'll then look at next time, once you've again gone through and practiced those, we'll be looking at, well, what about the fuel benefits on top of that as well? And then we'll have, again, there's just a couple of other benefits for us to look at. So hopefully we'll get this chapter finished within our next session together.